Till now we have been doing problems on consignment accounts under cost price method. Today we will do invoice price method. Okay. Once it is over, now the chapter is over. Look at the board, everyone. Suppose a consignor has borrowed a crore of rupees to start business. A consignor to start consignment business at a particular place, he borrowed 1 crore rupees. Okay. Rate of interest is 10% per annum. He has promised to pay the lender 10% per annum interest on the money borrowed. Okay. Cost price of each product is 100 per unit. Market size maximum 20,000 units. So a consignor has borrowed 1 crore rupees and suppose this is a question. Consignor has borrowed 1 crore rupees to start a business. He has borrowed the money by, we can say, promising to pay 10% per annum as interest. The cost of each product which he has purchased and he wants to send to the consignee and sell, the cost of each product is 500 per unit. The market size, maximum market size at the consignee's place is only 20,000 units. So actually what the consignor did was, he borrowed 1 crore, with them purchased 20,000 units. Press on button on your calculator. 1 crore divided by 20,000 units. Divided by 20,000 units. He paid 500 rupees per unit to purchase the goods. He has sent these goods to the consignee. Okay? And normally consignee will take at least 1 year to sell away the entire stock. My question is, what should be the minimum price at which consignee should sell the goods?
500.
And again explain. He has borrowed 1 crore rupees at a rate of interest of 10%. With this 1 crore he purchased 20,000 units. Cost price of each product is how much? 500. He sent these 20,000 units to a consignee. And consignee will take normally 1 year to sell the goods. My question is, at what minimum price should the consignee sell the goods? 500? If he sells for 500, what will happen? He will recover only 1 crore rupees. Cost price of the goods is also 1 crore. How will you pay? Interest. Interest of 10 lakh will accrue at the end of the year, no? It will become an expense for you. How will you pay interest? So we cannot sell at 500. Tell me the minimum price which we should ask the consignor to sell the goods at. If he sells for 550, can we recover our interest cost? Just check. If I sell the products at 550, 20,000 units into 550, it is 1 crore 10 lakh. I can repay that 1 crore principal. I will be still left with 10 lakh. With that I can pay interest. This is minimum price. If you sell below this, you are going to get a loss. If you sell above this, you are going to get a profit. Suppose consignee sells all the goods for 600, then I'll make a good profit. I'll start making 10 lakh rupees profit. Is it clear? Now, suppose you tell the consignee that, boss, I'm sending you 20,000 goods, cost per unit is 500. Consignee says, okay, cost per unit is 500, no? I will sell for 520, 525, 530, 540, 550. What will happen if he sells for 525, 530, 540? Consignor will make losses. So what the consignor says is, he thinks, if I tell the cost price of the product is 500, my agent will start selling the products at a lower price. I may or may not make some profits. He knows that the consignee should not sell the goods below 550. So what he does is, wantedly he tells the consignee, when he is sending the goods to the consignee, I think along with the goods, you have to give an invoice, you have to send an invoice, because when you are transporting the goods from one place to other place, in between at night time the RTO people will stop the vehicle and check what is there. You have to show an invoice. You have to show the description, what that good is, who is sending to whom, they should know, no? So when you are sending the goods to your agent, along with the goods you have to send an invoice. It is called as a proforma invoice. What's called as? Because we are not selling goods to anybody. It is only my agent to whom I am transferring the goods. Yes? So we will take a document called as proforma invoice. On consignor, on that consignor will say 20,000 units at the rate of 550. Now when the consignee unloads the goods, the truckawala will give him the proforma invoice. He sees 20,000, cost price 550. So consignee feels cost price is how much? 550. Now consignee will try to sell the goods at above 550. Above 550 he will sell. If we start selling above 550, I'll make profits. Yes? Are you able to understand? But what was the real cost? 500. What was the cost informed to the consignee? 550. So what we have done is, we have artificially increased the cost by including some loading. So cost plus loading is the invoice price. Is it clear? So it helps us to ensure that we get some minimum profits. Let's start. We'll do a problem on this. Write down. Goods sent on consignment. Goods sent on consignment. Goods sent on consignment. 12,50,000. Continue. Packing, freight, insurance incurred by consignor 2 lakhs. Packing, freight, insurance incurred by consignor 2 lakhs. Consignee non-selling expenses 50,000. Consignee non-selling expenses 50,000. Next. %20 of the goods remained unsold. 20% of the goods remained unsold. Continue. Advertisement expenses advertisement expenses 50,000. Salaries 1 lakh. Sales 15 lakhs. Sales 15 lakh. Consignees commission 10%. Consignees commission 10%. Right, one more expenditure. Consignees commission 10%. Full stop. Leave 2 lines place for completing the question. I'll add some more masala at the end, not now. Now, with this information, prepare consignment account and consignee account in the books of consignor. Leave 2 lines place to complete the question. Open consignment account and consignee account in the books of consignor. I'll read the question once again. Please check. Goods sent on consignment 12,50,000. Packing, freight, insurance expense incurred by the consignor 2 lakh. Consignees non-selling expenses 50,000. Okay. Then 20% of the goods remained unsold. And what did we say? Advertisement expenses 50,000. Salaries 1 lakh. Sales 1,50,000. And consignee commission is 10%. Sales is 15 lakh. And consignee's commission is 10%. Is it correct? Continue. Let us try to prepare the consignment account and the consignee account in the books of consignor. Consignment account and consignee account in the books of consignor. Ready everyone? Let us start. What is the value of goods sent on consignment given to you? 12,50,000. What is the entry we have learned? Goods sent on consignment account at R2, trading account, first entry. Second entry, consignment account at R2, goods sent on consignment. 2 goods sent on consignment. How much? Two goods sent on consignment 12,50,000. Okay. Next, consignor paid how much expenses for packing, freight and insurance? 2 lakh. Consignment account at R2, cash 2 lakh. Consignee also paid some non-selling expenses, no? How much he paid? 50,000. What is the entry right? Consignment account at R2, consignee account 50,000. Consignment account at R2, consignee account 50,000. Consignee account will give a credit by 50,000. Correct. Next, consignee also incurred some expenses from his pocket for selling expenses. What are the selling expenses? Please read out. Advertisement expenses, how much? How much? 50,000. Consignment account at R2, consignee 50,000. Consignee account, give a credit. Advertisement is selling expense or non-selling expense? Selling expense. Next. Salaries. Consignment account at R2, consignee account, how much? 1 lakh. By consignment, 1 lakh. Next. Sales. Consignee has sold the goods for how much? 15 lakh rupees. What is the entry rate when the consignee sells goods for 15 lakh? Consignee account at R2, consignment account 15 lakh. By consignee 15 lakh. Consignee account to consignment, give a debit 15 lakh. Have you all completed it? Commission. Commission to the consignee is 10% of sales. 15 lakh into 10%, please type how much is it? 1,50,000. 15 lakh into 10% is 1,50,000. What is the entry rate? Consignment account at R2, consignee account, commission 1,50,000 by consignment. Now, how much percentage of the goods were unsold? 20% of the goods remained unsold. Out of the goods sent, 20 have remained unsold. What is the entry for closing stock? Consignment stock account at R2, consignment account by consignment stock. Question mark. Look at the board. Out of this 20%, out of this 20%, out of this 20% will be part of closing stock. Because this is cost price of 100%. This is cost incurred for 100%. This is cost incurred for 100%. Whereas these expenses are relating to sales. These can be matched to sales. But out of these expenses, some expenses belong to the next year sales. Is it clear? Are you able to follow? So out of this 20% has to be transferred to consignment stock. Can you do that? Press on button on your calculator. 20% of 12,50,000. Press on button. 12,50,000 and 20%. How much is it? 2,50,000. Memory plus. Memory plus you will press. Okay. Then 2 lakh into 20%. Memory plus. 2 lakh into 20%. Memory plus. In between, if any button has to be pressed, I will tell you that you have to press that button. Or else don't use your brain. Okay. Then 50,000 into 20%. Memory plus. Okay. MRC. How much? 3 lakh is the value of consignment stock. If you want to write the table here, valuation of consignment stock. Valuation of consignment stock. Cost price value of goods unsold 12,50,000 into 20%, 2,50,000. Add proportionate consignor expenses 2 lakh into 20%, 40,000 plus proportionate consignee non-selling expense 50,000 into 20%, 10,000, total 3 lakh. Correct? Please note down that quickly. So there is no difference, no? The difference will come, wait. %20 of this, 20% of this, 20% of this. Next year it will go to the opening stock, debit side. Next, with pencil, calculate the profit or loss and tell me how much is it. I did not say write. Just with pencil or on calculator, tell me how much is the profit or loss. No profit, no loss. Ayo, how so? Yes. So the junior accountant, let us say it is prepared by the junior accountant. Let us say consignor has 2 accountants, one senior accountant and one junior accountant. So the junior accountant prepares this. He calculates on the calculator that there is no profit, no loss. With a very sad face, he goes to the senior accountant and he says, "Sir, please take this consignment account. There is no profit this year." He feels very sad. So the senior accountant says, "Okay, give me the paper, you please go. I'll look into it." The junior accountant goes away. Then he says, he locks the door inside. And now he gives you some additional information. The senior accountant is now giving you additional information. He says, the goods were sent at a loading of 25% on the real cost. The goods were sent at a loading of how much? 25% on the real cost. This is not the actual cost of the goods. If actual cost was 100, company added 25 to it and the goods were sent at 125. Junior accountant was not informed about it. Why? They had a fear that junior accountant will tell it to the consignee and consignee will start selling the goods at a lower price. So both were kept in dark. The junior accountant and even the consignee, not consignor. Consignor was the actual cost. You understand? Now you are told that this is not the actual cost. This is invoice price. What is this? Invoice. Now add 2 sentences to your question. Goods were sent at invoice price to show a profit of 25% on cost. The goods were sent at an invoice price to show a profit of 25% on cost. Full stop. So now you are told that if cost price of the goods was 100, the goods were not sent at 100, the goods were sent at 125. You come to know that the first item which you wrote, it is not the actual cost. It is the artificial cost. What is it? Something has been added to the cost. Now my question is, when you calculate profit, when you want to calculate profit, you have to match sale price with actual cost price. Sale price minus actual cost price will give actual profits. Do you all agree? Actual sale price minus actual cost price will give me actual profit. But if you do sale price minus dummy cost, you will get dummy profits. What will we do with dummy profits? We don't want dummy profits, we want actual profit. So sale price minus actual cost will give you profit. But this is not actual cost. This is what? Invoice price. There is some dummy cost involved in it. So that dummy has to be now removed. Sale price minus actual cost will be correct profit. But it is not actual. No? There is some gas in that. Some pumping has been done. We call it as loading. What do you call it as? Loading. So some loading has been done. Some gas has been pumped into the number. That is why it has been inflated. So now we have to bring down this number to its actual cost. We have to bring down this number to its actual cost. So how can you remove? Can you do like this and write the actual cost in place? If I could do that, it would have been fabulous. But I cannot do that. I cannot strike off entries from the books of accounting. So I have to retain the dummy cost here. But whatever gas is there in this dummy cost, I have to remove it by giving a credit to the consignment account. Okay. So what am I going to do? I am going to give a credit to the account. By goods sent on consignment, I will say within bracket, removal of loading. Removal of loading or removal of extra gas. Look at the board. If real cost was 100, there was a profit of 25% on cost. The goods were sent at an invoice price of 125. This is at invoice price. So what is the gas amount? I want the gas amount. Cost plus gas is equal to invoice price. This is not called as gas, you call it as loading. Okay. So I want out of 125 how much gas is there? So this is equal to this. Gas is equal to how much? Gas is equal to how much? 2,50,000. Note down that working note. Write like this only. Remember it forever. Cost plus gas is equal to invoice price. What is gas? Loading. How was gas calculated? If this is 100, 25 units of gas was filled up. Totally 125. The goods were sent at gas price, invoice price. 12,50,000. I want to know how much gas is there. Did you all complete it? So I have removed the gas now. Gas price, remove the gas, you will get the actual cost. 12,50,000. Remove the loading, you will get the cost price. That is what I said. Now cost plus loading, invoice price. If I remove loading, what will I be left with? Cost price. Invoice price minus loading, cost price. Invoice price minus loading. Opposite side, no? Minus loading, you get the cost price. Now, let us check all the numbers, whether there is any gas in those numbers. In this amount, do you have any gas? What was this 2 lakh rupees? The amount paid to the truckwala, insurance, packing, 2 lakh. You cannot give him artificial money. If you give him, no, he will give you a slap. You have to give him real currency. It is a real cost incurred out of your pocket. There is no loading. Consignee, he has spent how much? 50,000. He also has taken out 50,000 from his pocket and paid it to him, somebody. It is an actual cost. There is no gas. All these expenses are actual cost. There is no loading in it. This was the only amount where there was some loading, which we have removed. This was the only amount where there was some gas. We have removed it by crediting. Okay. Sales, 15 lakh. Sales is the only amount which should be with gas. Gas means profit. In your entire income statement, the only number which can be with gas is sales. But that is not artificial gas, that is actual gas. So sales, this comes at cost plus profit, no? Sales will be at cost plus profit. All remaining numbers should be at cost. Cost plus profit, cost. Cost plus profit, cost. Cost cancel. What remains? Profit remains. This is the only number which can be at sale price. Closing stock, 3 lakh. Do you have some gas in this? Yes, there is some gas. Why? Closing stock value was calculated using this amount as the cost, no? We said closing stock, 20% of this, 20% of this, 20% of this. So when you have taken 20% out of it, you have taken 20% of the gas also in the value of closing stock. Is it clear? So now in closing stock there is some gas which has to be now removed. Write down. Elimination of loading from closing stock. Loading from closing stock, that is also technically called as stock reserve. Now you'll ask me the spelling, it is reserve. Elimination of gas from closing stock, or I will say elimination of loading from closing stock, or it is called as stock reserve. Look at the board. Closing stock value was 3 lakh. Broken down into two parts. Invoice price 2,50,000. Proportionate expenses 50,000. Please go back to the working note where we calculated closing stock value. You will find it consists of two numbers. Actually 3 numbers. 2,50,000 value of goods. 50,000 is 40 and 10. It is proportionate expenses. Now in this 50,000, no loading. There is no loading in that 50,000. But in this you have loading. Cost, loading. Question mark, question mark. Is it clear? So for the sake of ease, I will say this is 100, this is 25. This is 125. Correct, no? If cost was 100, loading was 25% on cost. If this is 100, this is 25, this is 125. 125 is equal to 2,50,000. What is 100 equal to? What is 25 equal to? Calculate. 50,000 and 2 lakh. This is stock reserve. You understand the chart? So what do you understand from what we have done? What you should understand is, normally we should do the problem, and at the end we have to remove loading from goods sent on consignment. We have to remove loading from closing stock. That's it. So we have to add 2 steps. Remove loading from goods sent on consignment. Remove gas from goods sent on consignment. Remove gas from closing stock. That's it. You have to add 2 steps when the goods are sent under invoice price. Clear, everyone? Now out of this I have to remove how much gas? 50,000. To stock reserve. We'll write on debit side. We'll say loading on, loading in closing stock. Loading in closing stock 50,000. Now look at the board. Now every item has been deflated. Wherever there was some gas, we have removed that gas. Now you can calculate profit or loss. How much is the profit? 2 lakh. How is it appearing now? It was hidden earlier. Now we have brought it out. To profit and loss account, 2 lakhs. Now tell me, consignee, how much he has to pay to us? Out of 15 lakh, subtract all these amounts and tell me how much consignee is debtor to us. Debtor for 15 lakh, creditor for these amounts. How much? Please tell me. 11 lakh without consignee has to pay to us. Debtor now 15 minus 3 lakh. 350 I think. 15 minus 350, 11 lakh 50,000 is debtor. He has to pay money. When you receive money from consignee, what is the entry you write? Bank account debtor to consignee account by bank. 11 lakh 50,000. This is called a what method? Invoice price method. One more problem we'll do. Right. Write down. Invoice price of goods sent on consignment. Invoice price of goods sent on consignment 25 lakh. Invoice price of goods sent on consignment 25 lakh. Continue. Consignor paid 4 lakhs. Consignor paid 4 lakh for packing, freight and insurance. For packing, freight and insurance. Next. Consignee non-selling expenses. Arif. Very good. 1 lakh. 1 lakh. Next, be careful here. Write down 10% of the goods sent were destroyed in a fire accident in the consignee's godown. 10% of the goods were destroyed in the consignee's godown in a fire accident. Next, 10% of the goods sent were unsold. Of the goods sent were unsold. Of the goods sent were unsold. Next, consignee spent 1 lakh rupees on advertisement, 2 lakh on salaries. Consignee spent 1 lakh on advertisement, 2 lakh on salaries. Consignee sold 80% of the goods sent for 30 lakhs. Of the goods sent for 30 lakh. Consignee is entitled to a commission of 10% on sales. Now, even before solving the problem, can you tell me how much profit will the business get? 4 lakhs? How? What is correct? Let's see whether the answer is 4 lakhs or not in consignment account. We'll see, okay? But there are some more masalas also added in the problem for you to make it spicy. Continue. Insurance company agreed to a claim of 1 lakh rupees. Insurance company agreed to a claim of 1 lakh rupees. Good stop. Let's start solving the problem now. Now what we'll do is we have to prepare 3 accounts. Consignment account, consignee account, goods lost by fire account. Right now. Mark this problem as very, 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 very important. Something sir will say. Mad fellow, no? So let us start. Consignment account, debit, credit. Consignee account, debit, credit. Goods lost by fire account. Are you given the loading in the problem? Write down, add one more sentence to the problem. Write down. The goods were sent at a loading of 20% on invoice price. The goods were sent at a loading of 20% on invoice price. Does it make a difference? 25% on cost. Is it not equal to 20% on sales? Same thing. Okay? Continue. Let us start. Be quick. What are the two entries that strikes your mind when I say goods sent on consignment? Tell me clearly. Goods sent on consignment account at R2 trading account. Wait. This entry should be passed with cost price. With what price? Not with invoice price. Second entry. Consignment account at R2, goods sent on consignment, invoice price. Consignment account at R2, goods sent on consignment 25 lakhs. Next. Consignment account at R2 cash. How much? Consignor has spent how much for packing, freight and insurance? 4 lakh. Consignment account at R2 cash 4 lakh. How much consignee spent on selling expenses? Consignment account at R2 consignee account. Consignment account at R2 consignee account. How much? 1 lakh. Non-selling expenses. Next. How many goods were destroyed in fire accident and how many goods were unsold? 10% of the goods sent were destroyed in a fire accident and 10% of the goods remained unsold. Before we go there, give posting. Now tell me, what is the next transaction? We'll deal with that. Please tell me, 10% of the goods sent were destroyed in fire accident. What is the entry we'll write for goods lost by fire? Goods lost by fire account at R2 trading account. Here we'll write the entry, goods lost by fire account at R2 consignment account. I'll write here by GLF. How much? Look at the board. I have to exclude, no? How much will I get? Are you same number we got? Three lakhs you got, everyone? Next. 10% of the goods sent were unsold. So again, out of these goods, 10% were unsold by consignment stock. I wanted other color pen, but still no problem. What is this arrows? 3 lakh. Actually, what we should do? We should prepare tables, draw tables now. Valuation of closing stock, comma, GLF. Same table we can do it because numbers are same. Particulars, closing stock, GLF. Invoice price of goods, 2,50,000. 2,50,000. Proportionate consignor expenses 40,000, 40,000. Proportionate, consignee, non-selling expenses, 1 lakh into 10%, 10,000, 10,000, 3 lakh, 3 lakh. Now in this problem, valuation of closing stock and valuation of goods lost by fire, one and the same. Why? Goods were destroyed in consignee's godown. If the goods were lost in transit, this would be 0. If the goods were lost in transit, this would be 0. But the goods have been lost after they have come to consignee's godown. Can I remove these tentacles? But you should put it in your notebook.
Yes.
Did you all draw it? Ready everyone? Let us proceed now. Now please tell me, closing stock is not shown at cost. Both are shown at invoice price. There is some pumping gas in that. Okay. Next transaction. What do you see next transaction? Advertisement cost. Consignee has spent how much on advertisement? 1 lakh. What is entry right? Consignment account debtor to consignee. Sir, will this not be included in valuation of closing stock? It is a selling expense to be matched to sales. Matching concept. Next, after that, salaries. Consignment account debtor to consignee 2 lakh by consignment. Again, selling expense match to sales. Wait, 80% of the goods sent were sold for how much? Only 80%. Out of 100, 10 is unsold. 10 is lost. So how much remains? 80. 80 is sold. For how much amount? 30 lakh. What is entry right? Consignee account debtor to consignment account. Consignee account debtor to consignment account. How much? 3 lakhs. Okay, 30 lakhs. Ready everyone? Now I think I forgot to give posting here, goods lost by fire. 3 lakh. Now mark in this debit side which account has some gas in it.
GS.
This has gas? Okay, GS means gas. There is some gas here. Actual. No loading. Same. There should be gas in that. Okay. There is some gas. In this you have some gas. In this you have some gas. In this you have some gas. So you have to remove gas from all the 3 numbers. Working note number 1. Calculation of loading to be removed from goods sent on consignment. Calculation of loading to be removed from goods sent on consignment. Please tell me how much was loading in the problem? It was 20% on invoice price. It was 20% on invoice price. We already know invoice price. You remember? Gross profit on sales percentage, sales is given to you. Sales and gross profit on sales percentage is given to you. Multiply. What will you get? Profit. That is what I taught you, no? No. I am lacking confidence whether I taught it or not. I taught you. When sales is given and gross profit on sales percentage is given, you can multiply both of them to calculate profit. Write down. Right. C plus L is equal to I. C plus L is equal to IP, not IP. Okay. Now, what is L? Loading. Read that sentence. It is 20%. So, next line you write in place of L 20. On what? On what? On what? So, go to invoice price place, write 100. So cost should be 80, balancing figure 80, balancing figure. Next line, cost question mark, profit question mark, invoice price 25 lakh. If 100 is equal to 25 lakh, what is 20 equal to? If 100 is equal to 25 lakh, what is 20 equal to? 5 lakh. Or simply boss, it is 25 lakh into 20%. 5 lakh. I have to remove loading by GSC. 5 lakh. Removal of loading. Removal of loading 5 lakh. Next, write down calculation of stock reserve on closing stock. Look at the board. Stock reserve on closing stock. Look at the board. Closing stock value 3 lakh. Two parts. Invoice price 2,50,000. Proportionate expenses 50,000. Invoice price 2,50,000. Proportionate expenses 50,000. In this, no gas, no loading. In this, two parts, GP and loading. GP means cost price. Cost price and loading. Now, in this problem, we know that if invoice price is 100, loading is 20, cost is 80. If invoice price is 100, loading is 20, cost is 80. If 100 is equal to this much, 20 is equal to how much? If 100 is equal to 2,50,000, so this is like kids only, no? How much is it? 50,000. 50,000. This is how much? 2 lakh. This is your stock reserve. This is the loading which you have to remove. So debit side you will write to stock reserve. What is this? Loading in closing stock. There is one more item where there is some gas. This was also valued using invoice price. There is some loading there also which we have to now remove. Write on one more working note. So now listen to me carefully everyone. When consignor wants to show this closing stock in his balance sheet, it is his stock now. He'll say closing stock balance sheet, inner column 3 lakh less unrealized profit 50,000, net 2,50,000 is the cost price of the closing stock. That is how we'll show it. We'll say closing stock, invoice price 3 lakh less stock reserve, unrealized profit, outer column the cost price. Is it clear? Now write down. Now in this also there is some loading which has to be now removed. Write down. Calculation of loading in goods lost by fire. Calculation of loading in goods lost by fire. Look at the board everyone. Goods lost by fire 3 lakh. Become a doctor, dissect it, open the body and see what are the items inside. Cost price, not cost price. Invoice price 2,50,000. Proportionate expenses 50,000. Proportionate expenses 50,000. No loading. No gas. Only bujhai gas. Invoice price 2 parts. Cost price, loading. This is 100. This is 20 loading. This is 80 cost. If this is equal to this, what is this equal to? What is this equal to? 50,000 or 2 lakh rupai. Now there is some loading. Remove it. You write here. 2 goods lost by fire. Same account you will use. Here you credited the account, now you are going to debit the account. Same account you have to use, GLF, GLF. Now what will be the posting of this there? Consignment account that are 2 goods lost by fire, no? So here we'll write by consignment. See the beauty of the subject. Gas price minus gas. What will be left? Cost price. Gas price minus gas. You left with cost price. Now compare that cost with insurance claim to calculate your actual profit or loss. First of all, you left with gas price. You remove gas price. You left with cost. Compare it with insurance claim to calculate profit or loss. Tell me, what is the insurance company admitted to a claim? 1 lakh. So right here, by insurance company. What is the entry we write when insurance company admits to a claim? Insurance company account at R2 goods lost by fire account. Hence insurance company account is debited, goods lost by fire account is credited. Now we can calculate profits or losses. Tell me how much is the profit or loss now? So, what is the process of solving the problem? First, become blind for some time, and then do the entire problem using invoice price as cost price. Before you calculate profit, do 3 adjustments. Remove loading from goods sent on consignment. Remove loading from closing stock. Himnesh, remove loading from goods lost by fire. And then start calculating profits. 3 additional steps, that's it. Profit or loss, tell me how much is it? This topic will change its name and become branch accounts in IPCC level. It will also become departmental accounts, same concept. If you have this set in your mind, that will be a cakewalk. For others it's a mystery. How much? 7 lakhs? No, not possible. 7 lakh? How? He said 4, no? Check properly. 7 lakh. Right, we have forgotten commission. It cannot go wrong. Consignment account debtor to consignee. Amma. 3 lakh. So much pain I have framed the problem. 3 lakhs. Consignment account debtor to consignee, 3 lakh. Now you see, we got our profit. To profit and loss account, 4 lakh. Now, we'll settle consignee's account later. Look at the goods lost by fire account. This is important. Many times examiner asks a question on this. Invoice price of goods lost by fire minus loading will give you cost price of goods lost by fire. Compare it with insurance claim amount, you get profit or loss. Invoice price of goods lost by fire minus the gas amount in it, you get the actual cost price. Compare it with insurance claim to calculate profit or loss. That is what we are doing. 3 lakh minus 50,000, 2 lakh 50,000 is the cost price of goods destroyed. Insurance company is able to pay only 1 lakh. So we have lost 1 lakh 50,000. It should be transferred to the P&L account. P&L account debit, this account credit. Consignee, how much paisa he has to pay? 30 lakh minus 2, 4, 7. 23 lakh by bank. 23 lakh. Okay. So we'll stop for the day. We'll continue tomorrow's class. Tomorrow we'll do some bits from consignment and then we'll start joint venture. Now try bits. Most of them you can do on your own. Try doing it. Okay.
Dengar itu.